Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders, and joining me from downtown San Jose is David Grandy from All About Trends. Good morning, David.
Good morning, Dennis. Good morning, everybody.
And David, this market is so exciting, don't you think?
I will say that. I mean, every day it's a triple-digit move one way or the other.
You know,
sometimes both.
I love, you've had a graphic in the past that shows Mr. Toad's Wild Ride. I don't even know if they still have Mr. Toad's Wild Ride down in Disneyland, but it is definitely a time where the wind blows in a different direction almost every day. So it's very interesting. But we're gonna cover a little bit of this today. So you ready to go?
I'm ready.
Okay, just want to remind everybody that all the materials we present here are for training purposes only, and the traders should always paper trade any new method prior to the risk of their own personal capital. I know many of our members, David, parallel trade with us, and just a reminder, when we share what we're trading, that is not a recommendation to jump in the same trade, but we. And I just need to say that. But because everybody is responsible for determining and understanding their own personal risk, and just because we may trade 500 shares of something, that doesn't mean that you should turn around and trade 500 shares of something, because your portfolio may not be where it could take the risk on 500 shares. Your appropriate sizing might be 100 shares or 50 shares, and that's okay. So I just want to remind everybody that. We've got a lot of stuff to cover today, and then we're going to look at some stocks. I want to remind everybody, hey, David, the week is finally here, man.
It is.
It is.
I was thinking we could go to Disney World and go on Mr. Toad's Wild Ride if you want, since we're going to be in Orlando. But then again, we get to do it every day with the market, so maybe we don't need more.
Exactly. I would talk about the e-ticket rides, but a lot of people on the line probably don't remember the e-ticket from in Disneyland. You probably don't remember the e-ticket.
I don't know what you're talking about.
You don't know what I'm talking about. Well, for those of us who remember the e-ticket down in Disneyland, when they used to sell the ticket books, it used to be an A ticket, a B ticket, a C ticket, an E ticket. E ticket was for the extreme rides like the Matterhorn and all that type of stuff. So there's a couple of people who remember the good old days. And just remind everybody that David and I will be presenting on February 7th. Now, did they come out with a new time for us, Dave?
Nope, same time.
Okay. I know it's early afternoon. And I think right after lunch, depending on what time you eat lunch. But if you do know anybody down in the Orlando area, please, David and I are going to be hanging around and watching some of the other presentations throughout the week. And please have your friends, have your family stop by and say hi. And again, just a reminder that David and I do like to talk about stocks. That's why we do this show every Friday. And we have two really powerful presentations that we can give to your group, either long distance via webinar, or if you're in the Bay Area, we can come to your group and do a presentation. The first is called The Art of Trend Trading. The other one is How to Benefit from Alternative Entries. I was sharing with you, David, I sat in on the training for the IBD's MarketSmith product this past Saturday, and almost to the person, they've eliminated the term alternative entries. They are now calling them additional entries, and I found that very interesting. How things may be changing just a bit, recognizing that the legitimacy of these classic, traditional technical analysis and technical entries. What do you think?
Yeah, well, I mean, they've always said, you buy initially for IBDers, you buy on the breakout, and then you add to it on the first or second pullback after the breakout.
Yeah.
So it's interesting, but it's interesting they've changed that terminology.
And so, yeah, and they really emphasized the shakeout plus 3 entry opportunity. And what I found very interesting, Scott O'Neill, Bill's son, was talking about how Bill always beats his fund managers, and it's typically because he's doing the earlier entry. And I found that, I just found that really interesting as I was listening to the presentation.
Yeah, but I mean, if you just look at the stocks they featured in their leaderboard product over the past 3 months, I mean, I think there's only 2 of them that are actually positive. I mean, they're all breaking out and either stalling or stopping people out. So, definitely, I think it's good that they're recognizing that maybe they need to be looking at some alternative entry points because their core strategy just hasn't really been working in this type of market for a few months now.
Yeah, it is a challenge, and we both agree, and we that I love and I only choose from IBD quality stocks,
right?
And so the system works, and it works very well. At the same time, there are some refinements that individual traders can do and take on board a little bit more of the more classical, traditional technical analysis in your evaluation.
Yeah, well, maybe we'll make it clear. We love IBD because they find the great stocks. They do all the fundamental research for us, and we agree with a lot of the systems they use. We just differ on where we buy stocks at and where we sell them. And that's the only difference. But the methodology and the I'm trying to say the types of stocks that they're looking for, those types of stocks we're looking for, and it's just a difference on where we buy them.
That's right. So, hey, last week what we were talking about, we were having nice tradable rebounds, but the question was it just a relief rally? We were having a mixed market. Well, we didn't get a lot of answers this week. Price continues in the indices to be stuck in a box. Bleakness abounds. A lot of negative reports out there, a lot of downward revisions to some of the U.S. economic things. Disappointments on profits, but for us to profit, we've seen over this past week, you must be nimble. You must be nimble, and sometimes that may mean buying at the close and selling at the open when the prices are gapping up. It is not a preferable way of doing business for a trading for a longer-term holder, or even a real good swing or swing trader, because you want to get a little bit of momentum. Unfortunately, like I said, prices are being stuck in a box. The S&P is stuck in a triangle rather than a box with a slightly bearish bias, and I'll show that to you on the charts coming up here shortly. NASDAQ's in the box, a little bit of a neutral bias. It's just moving sideways. The Russell I see building a lot of potential energy, but again, it's a neutral bias as of right now. And outside the market, we're in the heart of earnings season, and as we've seen from anywhere from Amazon to Alibaba, the earnings are coming with great punishment and great reward. We saw that last week. We're seeing that this week. You saw the big gap up on Apple this past week, but then you saw the huge gap down on Alibaba. Now, I'm not saying Alibaba's, I think Alibaba's, given that it's in the China market, is going to be just a great stock. But it disappointed just a little bit and got whacked. Whacked down almost to its IPO entry prices. So, might be, keep an eye on that chart. That's the other thing, David, that I picked up over the weekend that I always agreed with, and that's why I do the running list that captures every IBD 50 stocks that comes onto the IBD 50 every year, is just because a stock misbehaves initially is not necessarily a reason to stop watching it. Because, and it could be just, I'm going to watch that once a week, I'm going to watch it once a month, just to keep an eye, or even you can just go in and set alerts and say, if it gets to this point right here, I'm interested in it again. Because oftentimes that's where you catch those real huge moves on the stocks, is at specific objective levels of support. And then global concerns. I think the global concerns are we just, we don't know. This is a big mystery. I mean, if we were to take a poll of everybody today, what's your biggest global concern today? Is it terrorism? Is it the European economic stance? Is it the slow growth in China? You could all come up with a negative side to say, these are my global concerns. Anyway, each one of these is having at least it's almost like an instantaneous reaction or impact on the market. Then the market reacts and bounces and get these big daily price moves, and then it settles out. And so let's get over here. And I want to touch base. We're seeing that a lot in the percentage of stocks above the 20-day moving average on the NYSE. We got down here, down below 30. We bounced up. This just turned out to be an exceptionally, good short-term, 3 or 4 or 5 day upward trade. But then, bam, it hits this midsection, and since that time, it has done nothing but up, down, up, down. And this, my friends, is what we would call the meat grinder. And we're seeing this day in, day out. And it bounced up yesterday after a big sell-off, and today it's bouncing down. We'll see if it does anything constructive like it did over in October, where we come down and we chew around down here below the 30 level, and then it responded with turning positive and led to a really nice rally back in the mid-October to the early November time frame. And this is one of the indicators we use with the early warning alert system service that we provided Active Trend Trading. But we combine this with a couple of proprietary type indicators that Mike Traeger, my trading buddy from Dallas, Texas, handles, and he gives me the high sign when it's time. But this is just one of them that we look at. So let's see what's going on here. Hey, to the charts. I love looking at charts. So here's the S&P. And here's the triangle that prices are being contained in. With any triangle and any box type pattern, but especially the triangles, I look at them more as being like a spring. And the spring is getting tighter, 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 developing potential energy that will eventually burst forth. But the only question is which way is it going to burst forth? Is it going to fall to the downside? Is it going to bust up and go to the upside? At this particular point, we're in no man's land. The reason why I said that I basically caveating that S&P has a slightly more of a bearish, I have a little bit slightly more bearish bias with this, is one, we got back up here to the 50 after we broke down from the beginning of the year, popped up, dropped, and then we came back up to the 50 again, just, the end of last week, and then we reversed down, back down to this support level, just below the uptrending line, is that what we're seeing is, look at this 50. It's being hammered over. The 8 and the 20 are starting to slope down. For those who've joined us in the Active Trend Trading for this week's training session on Wednesday night, we talked about that. Is once the slope and the stack of the moving averages start to go in a particular direction, that's telling us, that's our early warning saying, hey, we're going negative. On the weekly chart, a slightly different story, because we've got the longer term. This is the approximately 200-day moving average, which corresponds to here. It's still upsloping, so that can still work as a good level of support for a potential bounce. However, the shorter term, would be this 8-period moving average, which is about the 50, is starting to slope down, and the 20-week, which is approximately the 100-day moving average, is starting to be hammered on, and it'll get hammered, and we're getting one of these. Is that going to be the action? We don't know at this point. I mean, it could be, but at this point, it is. But like I see, it just took a tick down, David. You see that? It just moved. Anyway, so that's the S&P. Take a look at the NASDAQ. NASDAQ, it more or less is trading in an inverted triangle, in that you got your flat side on this side, and then you've got your downside coming here, and it too is just stuck in the middle. But I'm a little bit more bullish on this than because I like this action that's going on down here. We've got the stochastic starting to turn up. We've got the TSI starting to potentially turn up right at the 0 line, which could lead to something positive. The momentum is anemic, and on the weekly chart we got a momentum going down. Everything else has a downward slope. However, watch this level of support. It is tested at 1, 2, 3, 4, 5 times. And that can be either positive or negative. Yeah, it shows you're really strong at 4,100, but at some point, after testing so many times, so quickly, that could eventually fracture this level of support, sending us lower, because right now we've got to get back up through that line to have clear sailing to newer highs. The Russell. As you can see on Wednesday, the Russell did not like what the Fed had to say. And why is that? The Fed basically changed one word in their report out. They said basically that the economy is steady growth, which led the institutions to believe steady growth means increasing interest rates. Increasing interest rates impacts to the negative side the small caps. And so we got a really great reaction off of the Russell. It breaks back down because, I mean, it was looking fine, like it wanted to break out and go higher. It did not, and now it is starting to potentially roll over. If we break below the 1170 level, then we're going to probably retest back here at the 100 and the 200-day, which is the red, and the 100 are almost parallel to each other. And as we see here, we're getting this spaghetti kind of mix on the moving averages, which is basically an indication that we are very indecisive in the direction. Kind of reminds me of that old cartoon where George George wasn't too bright, but he was always asking, which way do I go? Which way do I go? And clearly, the market is trying to ask the same question, which way do I go? So with that, David, I hope that was both entertaining and enlightening. David?
That was excellent.
So you ready to go, Ben?
That was excellent, Dennis.
Thank you, sir.
I'm ready.
I'm switching over to David. There you go, my friend.
All right, thanks a lot. So this is the slide I had last week. Another buy the dips. We're still waiting to find out. We're just, every day we're just getting this chop fest. We're either up, triple digits or down triple digits or both, and it's kind of a market where it's really tough to make much progress no matter what your strategy is. But for those of us to buy stocks at support, it's much easier to ride that out versus buying breakouts and that are well extended from support and then getting whipsawed around. So, but thus far, the indexes continue to hold support. Most leading stocks are doing the same. So, is this another buy the dips opportunity? Well, the answer so far still is yes. Although, here we are again, getting closer to support and getting closer to make or break time. But every time we've come down here, the market has found a way to rally eventually, and until that trend changes, we have to respect that trend and we have to respect those support levels. And so the big question is, when are we going to get follow through one way or the other? So as you can see here, the S&P, as Dennis mentioned, we got this box here, and we're much closer now again to support than we are resistance. So we're well short-term oversold again. So we're in what we call the zone, and we've got a number of IBD quality leading stocks that are on either current positions of ours or are on our watch list that are setting up some nice patterns for us. So what are those patterns? What's our game plan? We just don't chase stocks. We let them come to us. We buy support and we sell resistance. And we do the opposite when we're shorting, and we're just trading what we see. We're not worried about the headlines or what somebody thinks or whatever. It's just what we see on the charts. And going back to the S&P here, you can see we're at a support level where it's been defended before. Here it was defended yesterday, and then we have another level just below it. So we're definitely in the zone here. So today kind of has another washout feel to it. There's a lot of stocks are in the red, and it just feels like it's just one of those days where nobody's buying, and just one of those things we have to sit through, knowing that we're kind of in the zone here, and just try to hang tight with what we have and see what next week brings. So let's talk about some IBD quality stocks that are pulling back and they're near support. This is Umbrella. This, as you can see, is trading in a very defined uptrend channel as defined by the green lines. And every time it pulls back to support of the trend channel, it makes a nice rally higher. And here we are again. I don't have volume on this chart, but if it was, you would see volume looks a lot like this pullback here, where it started off heavy, and then as it's continued to pull back, it's got lighter and lighter and lighter. So it doesn't seem like anybody's in a big hurry to sell the stock. It's just, again, everyone's just kind of waiting and waiting and waiting, and at some point the stock's going to make a move one way or the other. So this is definitely in the zone for us here. This is Alta Salon. Again, not the most exciting stock. It's just kind of the scale on it isn't all that terrific, but it is in a nice overall uptrend. And here we are pulling back towards support. It has a prior breakout level up here and another one down here. So, and just like most breakouts, it's just had a trouble really making any headway in this chop fest market. So, but it hasn't flashed any sell signals either. And as long as it continues to pull back to support here, it remains on our list to take a look at. And then another pattern that we look for are stocks that used to be nice big winners and have now set up a new base, and rather than waiting for it to form the right side of the base and buy it up in the $54 range here, we look at where is the resistance within the base, and you can see this sky blue line is a resistance level of $44, and if it can pull back here to the 42 range and test the 50-day again and then move higher, and then break through this 44 level, we'll be looking to pick that up. We call this pattern the right side of the cup crossover. That's what RSCC means. So it's just another way to, we were talking about buying IBD stocks at alternative entry points or additional entry points. This is one of those that we look for. So, Alta, AMBA, and SNCR are all IBD quality stocks. Alta and AMBA are currently on their sector leaders, which is apparently their toughest screen, and Synacross used to be a sector leader. So these are excellent stocks. They've got great fundamentals, and they're setting up really nicely technically. So these are the three that we're really focused on right here. And again, we're just kind of waiting for them to get going. So that's what we're doing. We're just waiting for some follow through. When we get that, we're going to sell those rips as we trade up into the resistance level, the red line of the box that we've been talking about, and then we'll sit tight and wait for the market to set up the pins again via pulling back to support and having leading stocks pull back to support as well. So, so if you want to trade these stocks with us and sign up for our 15-day free trial at our website, just go there, sign up. It's real easy. There's no credit card or anything, just your name and not even your name, just an email address that you want your your newsletter is sent to you, you get everything our paying subscribers get for 15 days, and that means you get a newsletter every trading day as well as one over the weekend. You get great commentary on what's happening in the market from a technical standpoint, as well as the current positions we're in and the patterns we're using to trade them, as well as stocks that are on our watch list like Alta and Synacross. And so when a stock on our watch list triggers a trade, we send you a trade trigger alert so you know exactly when we're buying a stock, how many shares we're buying, and you can make the call, like Dennis was saying, based on your own portfolio size and risk parameters, how you want to get involved with that. But we've tried to make it really easy for you to trade in tandem with us and pick up great stocks at support versus chasing them as they're breaking out in a market that's not been kind to breakout buyers of late. So that's it, Dennis.
Hey, awesome, Dave. Yeah, it's been one of those kind of markets. That was the other thing I picked up this past weekend is there was a lot of traders who were making presentation at the MarketSmith conference, and they were all saying that January. Here, let me summarize what they said. January sucks. No, what they were saying is January is really a tough month to trade. And I have to agree with that because, I go back and look at some of my past Januaries. It's sometimes it's real challenging to kickstart what's going on. Kickstart your, get back into your new trading campaign, which is all very important. And so, yeah. And somebody mentioned, Gino mentions that Bill says basically he would love to take a vacation in January. I think it's a good idea. That's why David, maybe we should plan next year to get David to try to take a vacation at the Money Show, and maybe we'll have one in January. I don't know. We'll see. Hey, here's the way stocks get punished. Decker's Outdoor, which was a darling back in the day, had been trading in kind of a sideways pattern for the past last year per se. And then it disappointed in earnings, and it had already turned down and started falling. So, so the signs of this disappointment were actually taking place up here, and then finally you get this capitulation down here. And on the flip side of that, I'm going to show everybody a real quick picture. Let me get that erased. And then on the other side of this is our good old buddy Amazon. Look at that. Isn't that pretty? A couple of things Amazon's doing is this is a huge move here. Now, are we going to try to jump on this freight train right here? Heavens no, because where it's going up really quick, up to a level of resistance. It's up here at about the 360 level, maybe a little bit to the 365 level. And we're going to see if it does one of these. But Amazon's hey, it's a household name. And how many of you guys are Amazon Prime members? Show of hands. Yeah, a bunch of us, huh? We like that product. Anyway, it may get up into here, bounce down. And did you hear that Amazon's actually going to start doing some of its own television shows and movies? I think that's cool. Anyway, I am not a big proponent of Amazon. I'm just saying I just wanted to show you how a stock, one disappointed, one did really well, and away it went. Let's take a look over. Let's go back to the slides. I think I had too much coffee today or something, David. I don't know. You can't see my screen, yes?
I can see it.
Okay, cool. Anyway, how did the active trend trading strategy do this week? Basically, we are now flat the market. We are totally in cash. I just wanted to share what a couple of our traders had to say. Andy in Austin, Texas, I repeated the parts that could be repeated because he was very colorful in his statement back, but he was basically very happy. He loves the guidance that is provided. Right now, these are the trades we have done in the early warning, not the early warning, but the active trend trading system for the year. I try to shape the trades around where we're never open in more than 5 positions at a time because I want to be conscientious of folks men and women who are still working for a living. And let me tell you, when you start getting more than 5 to 10 stocks in your portfolio, it is hard to manage. And so we follow the basically the 5 pillars of trend trading. Is we basically show you what to trade, we show you when to get in, when to get out, a strategy to use, and then what to expect. And we follow that procedure throughout. So, for the year, we're really pleased so far. We're up about $1,200. That exceeds the subscription amount by about 4 times. We're about 3 times for a yearly subscription. And then our early warning system that we launched the latter part of last year, we've had 1 trade so far, and the composite on that is up about 4.15 on the individual positions. And here's what we've done through the past 3 years. And if you were, it says Microsoft PowerPoint is restarting. Hold on, guys. Sorry about that. No, I picked up this new computer specifically so that it wouldn't do this. Now, can you still see the PowerPoint presentation, Dave?
Yep.
Okay, good. We'll get over here. Get on to where we're getting. Anyway, there we go. Just a quick reminder, the early warning alert system is up and operational. Expect to trade 3 to 6 times utilizing this service. Right now, just for the members who join us with how to make money trading stocks, we're offering this at $349, which is 60% off its regular yearly. And this is just a yearly subscription. If you go right here, you can it will take you directly to the page where you can take advantage of this discount, or you can send me an email and I will help get you set up. A little bit about. So basically, Dave, that's all I have today. And good job. I appreciate what you've been. We're seeing the same thing. And have you guys been finding it's a challenging market?
Yeah, I mean, it's like I said, it's just looking for follow through. We know we're in the right stocks, and we're closer to support than we are resistance. So it's just a matter of the market playing ball with us here. Yeah, exactly. And sometimes that waiting for the market to play ball with us is one of the most challenging things, because we human beings tend to be I tend to want to be a little bit, impatient. Yeah, that's it. So, hey, I want to remind everybody before we start looking at some stocks, we won't see you next week, right? We're not going to have it next week because we will be in Orlando. We'll see you the week after. And on Friday, which that Friday will be February 13th. And but we'll keep Dave will keep updating you from his service. I'll be keeping my members up to date on what's going on, and we won't miss any trades, or we won't miss any updates, I should say. And so let's see, Dave. So here's information on how to contact Dave. Here's information on how to contact me, if you so choose. And I want to thank everybody for all the great emails that have been coming in. It's I like to respond and get those informations back out to everybody. So, David, you ready to start looking at some stocks? I am.
Okay. So, folks, now is the time. So we have got NXPI. Do you have that?
I think so.
Okay. And Gino is long at 80.50. Yeah, Gino is long at 80.58 on that.
Okay.
And then, let's see, Andrew, is that COMM? Okay. So, do you have that, Dave?
COMM?
No.
I have an XPI, yeah.
Okay. Do you have Starbucks?
Yeah.
Okay, why don't you do Starbucks in the other one? I'm switching the screen to you. I thought I switched the screen. Did it? Oh,
Nope.
let's try that again. There you go. There you go. Now you got it.
So NXPI is what we've been talking about, another breakout that's just stalling because the market's not giving anybody anything really to work with right now, so particularly breakouts. So, but it's still holding up. It hasn't triggered any sell signals, and as long as it stays above the 50-day moving average, you might as well keep your position in there. But again, we're closer to support on the indexes than we are resistance, so just got to sit tight and play the waiting game like everybody else.
Did you have Starbucks too?
I think so, but I don't know where it is, so I have to give me a little time to find it.
Okay, I'll let you find that, and I'll pop back over here, and we'll take a look at our first one coming up is Unisystems. Yeah, Unisystem was in a short-term downtrend, and it confirmed a little bit of additional after earnings. I have to do a market a stock checkup on. Oops, let me show my screen. There we go. And so here's Unisystems. I'd have to do a stock checkup on this one. Personally, for me, unless this company gave me stock, I wouldn't necessarily be looking to buy it. And I mean that because one, yeah, it's got an okay scale, and the range is kind of okay on a weekly basis, but yeah, again, I have to look a little bit more at it. I don't know if this is on one of the IBD elite list or not. Yeah, if it didn't meet the IBD qualifications, I wouldn't be trading it again, unless somebody gave me the stock, and then I'd figure out how to trade it from there. Let's see what else we got. COMM. Well, actually, we've got.
I'm ready on Starbucks if you are.
Okay. Let me do one more here. BRLI. This is a BioReference. I am totally unfamiliar with that. If you like to trade, I guess it's a biotech type of lab. Again, it is right now working in a channel from about 24 up to about 34, on exceptions up to 36, 37. It has volume below 500,000 shares, which would keep it off my list. Again, I'd have to do a stock checkup on it to see what quality of a stock it is before I'd even entertain putting it on my list to watch. If you are already in the stock, I mean, it's had a nice run up. I mean, this is 19, almost 20%. It is 20% up to the high there, but it looks like it's back up at the top of the trending range. And so if I bought it here, I'd be looking at potentially taking at least some of the profits off the table here. So Dave, I'm switching back to you.
Okay, so Starbucks gapped up big on earnings, so there's really nothing to do with it right now. I mean, it's not safe to buy it up here, so you just have to kind of wait for it to consolidate here, either sideways or pulling back into the 50-day, because you're a good 10% away from the 50-day right now, and in this market, I don't want to buy anything that's not close to support right now. So the trade was going into earnings, although it was pretty sloppy going into earnings too. So that was a tough call, tough trade.
Yeah, without a doubt. I mean, from here with a big gap up like that, David, it's basically digesting its gains, like you said. And I mean, it may spring and go higher from there, but for me, it'd have to, the moving averages would have to catch up with it, and it would have to go back into a proper entry action point. And right now, it's well extended, like you said.
Yeah, I mean, if we were in a better market, you could use the 10-day or something, but in this market right now, you just don't want to be taking unnecessary risks.
And Richard, Richard, did you do Starbucks? I think you did. You did. Cool. Hey, Richard is up. He got into it at $70.
Excellent.
So it hasn't really given you a reason to sell it yet. I guess one of the things I'd be looking at is if it broke down below that 86 level, or, you know, depending on how many shares you bought, I'm always a proponent of, you know, take a little bit of profit off the table, especially if the market gets wonky. But certainly if it closed back below that 86 level, I would be wanting to make sure I took a little bit of profit. I don't know if you profited on the way up, but nice trade, Richard. So, hey, you want to do VIPs? Or I can do VIPs. How about you, UNP?
I can do UNP if you want to do that first.
Okay, I'll do VIPs first. And then we've got, and I'll talk a little bit about BABA. Or actually, somebody had up here, I'll just do a real quickie on CommScope. CommScope holding, yeah, big upswing, huge volume down here. I'd have to do the stock market checkup on this to see, you know, how it's doing. But I mean, you're getting huge volumes up here, biggest spike in a long time. You know, I would be, if I was going to trade this, if it passed the stock checklist, I'd be looking for some kind of pullback back into here. Today's a shooting star type candle. If it finishes like that, that is a bearish reversal signal. And so if you're long this stock, great time to either you know, there's no real reason to sell it here, but you would want to keep your stops fairly tight. And if it broke back down below the approximately the 26.93 level, you'd want it to be it may be, you know, pulling back even more, because this is a significant, huge move. Was whoever gave me this, was it a result of earnings, the big jump? Because I don't see the earnings logo on the thing. And the answer to that was yes, it was due to earnings. Okay. Alibaba. Alibaba, whoever bought it over here, you know, you're really happy when it got up to here. But if you watch this fall back down and now drop back down to where you purchased that, you're probably kicking yourself in the rear because it started showing signs of weakness as it was tracking down. And this is actually a channel here. You got that channel, and you got this channel, and you know, with earnings it broke totally out of the bottom of this, but it sat up a number of lower lows, lower highs, and that's been doing that ever since November of last year. That defines a downtrend, as we know, and it, much like Decker, basically fell to the downside. Now, if you believe in Alibaba, you may want to keep an eye on it here. You've got a nice level of support and resistance, and let's just see if it starts working its way back up this side. It may go up a little bit and then come back and retest. I would not take Alibaba off of your watch list. I'm not taking it off my watch list. So, Dave, did you have one? And I'll
you want me to look at UNP?
Okay, you want me to do VIPs real quick?
Okay, yeah, go for it.
Yeah, we got into VIPs last week, traded it. What's it doing this morning? Yeah, it's getting a nice rebound. This is the exact, you know, this is so funny. We picked up VIPs over here at about 2180, 2190, and it ran up here, and we had put an initial profit target to offensively sell on strength at about 2340. We got hit there, but then on Wednesday it puts in almost a dark cloud cover, then gaps down yesterday. There was this trend line coming up here, but actually at that time you had a trend line coming up through this low here and the 20-day moving average. And so with that, I put a stop just below this. What's it doing now? yes, this is a bullish engulfing pattern of this, of yesterday's body. What makes this pattern somewhat suspect, though, is one, which way is the 50 going? Down. The volume as it was making that climb was low. The momentum while it was making this climb was low. It wasn't engaging. It might be just getting back down here to rattle around a little bit before it springs up again. I like VIPs long term, but right now, because this, a bullish engulfing after a downtrend, I would not consider just a single day down a downtrend. So, Dave, I'm switching to you, bud.
Okay. So UNP looks a lot like the indexes. Got a nice box here, support down here, resistance up here. It's pulling back from resistance towards the 50-day moving average. So I would I'd wait to see if it makes a high volume move off of the 50-day, where you can take a stab at it. But keep in mind it hasn't really respected the 50-day in the past. I mean, it's broken it twice now. So if you're going to do it, I would put a real tight stop on it.
Okay, sounds good. Do you have EPAM?
I think so.
Okay, go ahead and get that up, and then a real quick question while Dave's bringing up that chart, folks. I have been including on the recording of the how to make money trading stocks show. I'm including this market review. Are you finding that are you finding that beneficial to be able to just go back and also see what we had to say about the individual stocks? Okay, great. Did you do UNP, Dave?
I just did it.
Okay, thank you. I've got about 47 things going on my screen. Did you find it?
I'm working on it right now.
Okay.
Okay, so EPAM, this is something that we were just talking about with Cinecross, where you've got a stock that's building a new base, and it's got resistance here around 40, 49 and a quarter or so, and it's breaking above that level today. So, that's one of the setups that we look for. Me personally, I've always been scared of this stock because of its ties to the Russian region, and you never know what's going to go on there because a significant amount of their business is from that area.
Is it tied to the hey, Dave? Is it tied to the Russian mob?
I don't know.
Okay.
So every time there's a news with Russia, the stock gets violent. So, I've always wanted to stay away from it, but just looking at the chart, it's making a nice right side of the cup crossover today.
Yeah, that looks pretty good, and it's actually, it's also busting above that middle section. If you're an IBD trader, you notice that is on a daily basis at least, that is a double bottom, IBD double type bottom, but it's breaking around that above that midsection. Which I'm pointing at on your chart, David, and nobody can see. Anyway,
yeah, it's just a wild stock. I mean, look at this here, and for me, there's just AMVA and Alta and Cinecross, those three examples. They're not anywhere near as volatile, and I'd rather focus on those.
Yeah, I mean, we mentioned it before in other shows where we talked about, you look for stocks that have order to them, not chaos. And when you see a stock that has price chaos, I kind of like step back from it and say, I'm not too excited about that. Doesn't mean you can't make money in it, but it is one of those where you just go, I don't know about this one. So let's see, we've got a question about oil. It's in a downtrend. Here is the weekly over here on the right-hand side. Here's the daily. As you can see, from mid-2014, oil started to fall apart and has continued to fall apart. let you know a little bit what's going on with that. My son works as a chief mate on an oil drill rig in the Gulf of Mexico. He came home last night, and the drillers are the drill ship owners are actually starting to stack some of their drill ships in port. They're either pulling them out of the water and making a cold stack, or they're keeping them with just a very small crew. So from what I understand, when the price of oil gets both for the U.S., when it gets below $55 or $60, that is the cost to get the oil out of the ground. Whether it's fracking or whether it is a straight well pull. So with that, we are now well below that, and basically when prices fall that low, they stopped looking for oil. Once the surplus supply of oil is worked off, then we will probably start getting to see some pop back up. Because this is huge. I mean, this is basically the price of oil has gone down, and we're seeing it at the pump. I mean, I knew something was going on out here in California when I started seeing the Humvees starting to come back on the road. Did you notice that, David?
Yeah.
Okay. So it's down 49, almost 50% from its, not even its high. This is from when it broke out. From its high, it's down today. You were down about almost 60%. That's huge. So nothing on the chart at this point says, hey, I'm ready to turn around. We may go sideways here. Let's see. Any more stocks, guys? I've got one more here. I am really keeping my eye on GoPro. Yeah, I'm keeping my eye on it. For one, I do think it's a good company. I'm not ready to buy it right now, but what I'm keeping an eye on it for is, one, is we're mingling around here. We found this low, and low volumes down. We've got things turning over. It has earnings coming up on. It has earnings coming up on the 5th, next Thursday. And I mean, if this is constructive and it breaks back above this low, it may put in a nice little tradable rally and build back up. But as of right now, it isn't a downtrend. And but I will be looking at it for a potential shaking out, where it shook out over here, big down day, then kind of has gone sideways. And if earnings weren't so close, then a move back above this 53.79 level might provide a trade back up to the downtrend line. Might. So, got one more. ECT. Hey, Dave, do you have FEYE, FireEye?
I can pull it up, no problem.
Okay, I'll talk a little bit about ACT as you're pulling that up. Yeah, ACT. Yeah, looks what's going on here is it's had a huge run over the past couple of years. I mean, we've gone from here to here, which is about a 230+% run. We've got a nice trend line underneath it that we could draw. Look what's happening here with the truth strength indicator. With the truth strength, similar to the stochastics, but it also measures some of the internal strength of the stock. And look what's happening to it. It is squeezing down, becoming indecisive, which basically says that either one, the momentum is coming out of it, or the potential energy is gaining, gathering in it. The momentum shows that momentum is slow, slacking off. From a shorter term trade perspective, Jorge, is that yeah, we are getting a good bounce off the 50, but we've had numerous bounces off the 50 coming up. So I would be suspect. Where might it go? I mean, if I took this trade here, where can I expect it to go? 280 to 285. Might it break out? Sure, because we had this little cup thing going on here. You see that here. Not really a cup and handle, just almost like a straight cup. You got a breakout here that failed, pulled back, and then took off back again. And so right now, and it has earnings coming up. When's earnings coming up on this? Mid part of February. So Dave, I'm switching to you. I think I'm switching to you.
Okay, so
Hold on.
FireEye is one of those stocks that would drive me to drink because it's like, look at the daily trading ranges. I mean, it's like at least 5% or more every day. So, for me, what we're just talking about, we want to have a calm stock. We want to have a stock that's predictable, and this one's all over the map every day.
Yeah, that's talk about Mr. Toad's wild ride. That's definitely
exactly.
Hey, who was Mr. Toad anyway? I can't remember the show that it came from. One of the Disney things, right?
I think so. I don't know.
Okay, so guys, we're just about at the end. I'm going to basically share a couple of stocks with you that I'm keeping my eyeball on, and they're not ready to buy quite yet, but they're a little bit interesting. This is Habit Restaurants. It's I
was just looking at that one last night.
And Habit Restaurants. This is a stock or a restaurant that was originated down in Santa Barbara, around the University of California, Santa Barbara, and it has a pretty aggressive expansion. It could become I won't say it'll become a Chipotle grill, because I doubt that's going to happen. But it had a awesome IPO day, launched off. Then it digested all of this and it's putting in this big, huge cup here. And so it might be worth a watch. They're going to be expanding it from just a California chain into other places in the United States. A couple of other that I'm keeping an eye on. I really like this stock.
Well, with Habit, I mean, we have this whole trend now, this fast casual. So we have Shake Shack doing this IPO today, and you've had Habit, and you can call Apollo Loco in that, and of course CMG. So
yeah, and the other thing I love about it, David, is it's kind of like kind of throwback hamburgers. I mean, back in when I was growing up, all those many years ago. It reminds me of the hamburgers I used to have when my mom didn't know how to drive. And before she got her driver's license, and just because she got her driver's license didn't mean she actually knew how to drive, but that's another story.
Would you rather go to McDonald's though, or go to Habit?
No. Well, that's just it. This was before there was McDonald's, right? But my dad would get off work, he would come home, and then basically pile in the car, drive into town, and go to the grocery store, buy groceries every Friday night, and then go to this hamburger joint where it was like 6 hamburgers for $1 or something like that, and so a lot of really great memories, with great fries, great milkshakes, and all that kind of stuff, and for me, it's kind of like a nostalgic type place to go. And so, hey, I'm keeping an eye here on Tower Semiconductor. It had a huge breakout. Look at this wonderful add-in volume here, and now it's digesting that. But I'm keeping my eye on this to see how much it comes back to retest that breakout. Good-looking stock. Another one is one last one. And this is a freebie for everybody. For TSM also. TSM was looking good. Oh, not looking so hot now, but it's coming back. It has retested this big, huge breakout and done so in a very unhealthy way. But we'll see what happens when it gets back here around the 50. Big mover for a lower price stock. And then one last one is I'm keeping my eyeball on YY. And you might say, why? it basically long uptrend over 2013. 2014 was kind of indecisive, but now it's doing something constructive over here. And if we can get these moving averages back up above the 50 and the 50 turning up, could be an interesting trade. Even if it just trades up to its prior highs, that's 11% there. That's 17% there. And if we did get all the way back up here to 95, that would be a 33% gain. Is it ready to be purchased right now? And not really. But, you know, if we get these breakouts or pullbacks, be an interesting stock.